India's stock market isn't just recovering post-COVID, it's evolving fast. Retail investors are taking charge. Startups are going public. And the Nifty and Sensex, they're hitting all-time highs. But is this the real hype or are we just sitting in a bubble? Today, we are breaking down what's really happening in the Indian stock markets since 2020, why everyone from LIC to Zomato is going public, and what the future could look like for Indian financial systems. Let's break it down. Section 1: The COVID shock and market bounce back. When COVID hit in early 2020, markets around the world tanked. India's Nifty 50 dropped by more than 35% in just a few weeks. Panic was real, but what followed was unexpected. Thanks to low interest rates, massive liquidity, and a tech driven push, the Indian stock markets bounced back hard. By early 2021, the Sensex crossed 50,000 points for the first time ever, and a new force entered the scene: retail investors. Between financial year 2020 and financial year 2022, over 4.5 crore DMAT accounts were opened. People stuck at home with access to mobile trading apps like Zerodha, Upstocks, and Grow suddenly became market participants. A shift that would have taken decades happened in just 2 years. Section 2: The IPO rush and Digital India's market movement. 2021 was India's biggest IPO year ever. From Zomato and Nykaa to Paytm and Policybazaar, startup after startup hit the public markets. Investors were hyped. Some listings soared. Others, like Paytm, crashed. So, why the rush? India's startup ecosystem, fueled by the VC money in 2010s, was reaching maturity. Regulators had eased norms for tech listing. Plus, public investors were ready to bet on India's digital future. But many of these IPOs had negative earnings. What people were really buying into? Future growth, aka story based investing. In 2021, 63 companies collectively raised rupees 1.18 lakh crore, approximately $15.4 billion through IPOs, the highest amount ever raised in a single calendar year in India. This surge was fueled by a combination of factors: a booming digital economy, increased retail participation, favorable regulatory environment. However, not all IPOs met expectations. For instance, Paytm's much anticipated IPO saw its stock price plummet post listing, raising concerns over overvaluation and investor sentiment. Section 3: Current valuations, fair or frothy. Fast forward to 2024. India's markets are still riding high, but valuations, let's talk numbers. The Nifty 50 P/D ratio is hovering around 20.8 compared to the historical average of 18 to 20. The market cap to GDP ratio stands at approximately 112.94%, indicating that the market is slightly overvalued compared to the country's GDP. But here's the twist: compared to China or even Europe, India's future growth still looks stronger. It's not just hype, it's backed by real numbers. Formalization of the economy, digital infrastructure like UPI, ONDC, raising middle class consumption, and manufacturing push under schemes like PLI. So, yes, valuations are rich, but they might be justified if the growth story holds. Section 4: Future Outlook, India's Market Decade. There's a reason global investors are bullish on India. Morgan Stanley upgraded India to overweight in their EM basket. JP Morgan launched a new India bond index. India is now the fifth largest stock market in the world by market capitalization, with a valuation of $5.4 trillion as of late 2024. The themes around this bullishness: number one, demographics, young population, rising income, and massive consumption potential. Number two, and financialization, fintech UPI, mutual fund SIPs, and more Indians becoming investors, not just savers. Geopolitical shifts. As supply chains move away from countries like China, India's China plus one opportunity gets real. But there's a big caution: political stability, regulatory clarity, and inflation control will be the key. Without structural reforms and job creation, this momentum could stall. Closing. The Indian stock market isn't a bubble, it's an ecosystem in transformation. From a club of HNIs and institutions, it's becoming a place for everyone. But smart investing still matters. Understanding what you're buying, know the difference between growth and hype, and play the long game. In the following video, I'm breaking down how the stock market's been moving over the last 3 months and how US politics are shaping the narrative. It's been nearly 5 months since the US elections, and markets are now adjusting to the policy direction of the new administration. From fiscal strategy and interest rate signals to foreign policy and global trade moves, especially tariffs. These shifts are having a real impact on market sentiment worldwide, including India. We'll unpack what's actually moving the markets and understanding US politics isn't just for Wall Street anymore. If you found this three-part series helpful, hit subscribe, share this with your finance family, and drop a comment on what you'd like me to break down next. Until next time, invest smart and stay curious. Thanks for watching, guys.